China's economy is struggling right now.
Chinese second quarter GDP growing at the slowest pace since 2020.
And its government could be setting up a series of stimulus measures to help the country avoid a major slowdown in growth. I'm going to explain the problems we're seeing from the Chinese economy, what the country's leaders are doing to try to contain the damage, and why these issues could be a problem for the US and the rest of the global economy.
Second quarter GDP growth 0.4%, much worse than expected, and that now cements the idea that the government has no chance of meeting its 5.5% growth target this year.
The biggest issues facing China right now are largely the result of government crackdowns. In an effort to slow speculation and debt accumulation, China instituted new rules on the housing market, limiting lending and land sales under the government mantra, housing is for living, not for speculation. The government has been aggressively enforcing its zero-tolerance policy on COVID-19 outbreaks, instituting mandatory lockdowns and testing whenever a new case is discovered. Chinese Communist Party officials have also taken aim at the country's tech sector, cracking down on planned expansions and breaking up companies deemed too large or powerful. In addition to government crackdowns, China is experiencing a generational heat wave and drought that have clipped the country's hydroelectric power.
And we already see slowdown in production in the steel industry, in chemical industry, in fertilizer industry, and those are very important things when it comes to construction, to agriculture, and also to manufacturing in general.
All of that has led to dramatic write-downs for growth expectations this year, and pushed policymakers to take steps to buoy the economy. The People's Bank of China has lowered lending rates multiple times this year, and the government has introduced hundreds of billions of dollars in stimulus measures. In August, Beijing announced a 19-point stimulus plan to boost the economy. That followed a 33-point plan announced in May that was designed to stabilize the economy. But China's economy is still struggling, and as the world's #1 trading nation, its weak growth could add to problems for the US and other countries around the globe.
To us, the most important factor outside of the zero-COVID situation is actually the housing.
The dramatic slowdown in its real estate market is slowing demand for raw materials, and the shutdown in parts of its shipping industry is holding up global supplies. Chinese companies have received billions in loans and investment from Wall Street that may not be paid back if firms go under. China's financial sector is becoming much more tied to the rest of the world, and could add to struggles American markets are facing with inflation, slowing growth, and aggressive policy from central banks. The US, which is a major consumer of Chinese products, and has much of its economy supported by the financial sector, could really suffer. It's like De La Soul said back in 2000, your people might have your back, but you need to watch your front. Indeed, ain't nothing guaranteed. That's all for now. I'll see you next time.